Thank you for taking the time to understand our new processes following the FCA's policy statement affecting defined benefit transfer advice. These are important changes that not only affect us at PensionHelp, but also you and any clients you may have who need advice on their defined benefit pensions. This presentation will give you a brief summary of the key changes brought about by the FCA's policy statement, as I expect that you'll be aware of most of these already. In particular, we will look at the move to non-contingent advisor charging and the new requirement to consider the client's current workplace pension, if they have one, as a priority over any other scheme to receive the funds if a transfer is recommended. We will then have a look at PensionHelp's new advice process and finally our fees and introducer fees. The FCA's policy statement focuses on charges and reducing the scope for any conflict of interest created by charging only when a transfer takes place. Due to this, there will be a ban on contingent advice fees for defined benefit transfer advice, and instead, non-contingent advice fees will be charged irrespective of the advice outcome or whether a transfer actually proceeds. Contingent advice fees can still be charged where the client qualifies for this under one of the FCA's carve-out categories. This will apply in scenarios where the client is in serious ill health, where a client has a life expectancy under the age of 75, or where someone is in serious financial hardship. Clearly, a client may well be concerned about the prospect of paying fees for full advice, when they may realise early in the advice process that a transfer may not be suitable for them. From the 1st of October, advisor firms providing defined benefit transfer advice will have the option to offer abridged advice. This is an alternative to the full advice stage and the costs associated with it. This is an abbreviated level of advice and can be completed at a much lower cost to the client. An abridged advice report can only have one of two outcomes. Either do not transfer or there is not enough information to make a recommendation. The advisor can state the reasons for this recommendation in the report. Previously, this would have been a full personal recommendation and would have required a full report and recommendation with an APTA and TVC. The client can still request full advice after receiving an abridged advice report, but in doing so will commit themselves to the full advice fee, which is payable irrespective of the outcome, and the advice may not change. PensionHelp have chosen not to charge a fee for abridged advice. Any client who ultimately proceeds to transfer their defined benefit pension will need to take full advice before doing so. Even if a case proceeds to the full advice stage, a client could then still be advised to remain in the scheme, and irrespective of the recommendation or outcome, the full fee will have to be charged. Non-contingent fees can be calculated as a percentage of the proposed transfer value, or as a flat fee, or as a mixture. The important element is that it cannot be a contingent upon a transfer happening. The policy statement states that if a transfer is being recommended and the client has a current workplace pension scheme, then this should be the default destination for the transfer. If an alternative product is being recommended, then it must be demonstrably better for the client than their current workplace pension. We're going to take a look at the workplace pension issue, as it will be really important after October the 1st cases. In demonstrating that an alternative product is more suitable, the advisor must include an analysis of transfer into the default arrangement of the current workplace pension in the appropriate pension transfer analysis report. There are only limited circumstances where a current workplace pension scheme can be ruled out. These are where the charges for the recommended plan are lower, or where a client is within a year of taking benefits and the workplace pension scheme does not provide the required flexibility. There are just a few other situations where an alternative provider can be justified, such as a workplace pension scheme cannot satisfy the client's specific immediate requirements. For example, it may be that the client can demonstrate that they are already a sophisticated investor. It's therefore essential for a defined benefit advisor to obtain detailed information about a client's current workplace scheme early on in the advice process. We have listed our workplace pension information requirements in the Q&A section of our introducer guide. I should also mention that the firm advising on a defined benefit transfer is responsible for reporting outcomes of transfers into the workplace pensions and alternative providers in a quarterly report to the FCA. However, it is the firm that gives the product advice for any pension transfer that is responsible for justifying this over the client's current workplace pension if it's not selected. This normally falls upon PensionHelp. However, where an introducer refers a case on the two-advisor basis, they will take on this responsibility in their product recommendation. Firstly, we should take a look at a summary of our pre-advice process, which starts with your client referral that will lead to our online triage process. And if your client does not wish to proceed from here, they can then book an appointment to speak with one of our case handlers, who will be responsible for collating the information we require before passing the case to our advice team. I would now like to give you a little more detail about each stage of our pre-advice process. But I'll just give you a moment to take a better look at this slide, and I'll make a quick call. We provide all our introducers with login details for our online client referral system that's easy to use and negates the need for secure email. It also helps us keep an audit of our referrals and respond quickly to your client. When referring your client, please upload our privacy notice and client agreement, both signed by your client. These are essential as this is your client's approval for PensionHelp to work with them and hold their personal information on file. We also need to include your client's completed financial review form if you have one. Ultimately, we will need to obtain copies of your client's ID, any cash equivalent transfer value for the scheme proposed for transfer, and state pension forecasts for your client and their spouse or partner. If you have any of this available, please also upload them with your referral. As mentioned, it's now important for us to obtain information about the client's current workplace pension scheme, if they have one. The Q&A section of our introducer guide lists out the information that we'll require for this. If this is something that you can provide with the referral, please, then it may save some time later on. If you have a preference of provider, should a transfer proceed, then please feel free to include this with your referral. However, where your preference is not for the client's current workplace pension scheme, please have consideration for the requirement now to demonstrate why the proposed plan is demonstrably better for the client. Following a referral, PensionHelp will email your client with login details and invite them to click on our link to our triage video and guide. This will take them through the pros and cons of safeguarded benefits compared with a defined contribution scheme and give examples of the type of people who take safeguarded benefits and the type who would transfer out of them. I'll show you a quick snippet from the opening of our triage video. Hi there, my name's John. I work at PensionHelp, a firm which is authorised and regulated by the Financial Conduct Authority. You've been asked to watch this video as you're looking to review a safeguarded or defined benefit pension scheme. This is a scheme which offers a guarantee or a promise about what you'll receive when you take money out of your pension. Welcome back. The guide will also explain the differences between abridged advice and full advice and give details of our standard fees for this, including introducer fees. Once your client has watched this and read the supporting information on our website, they'll be asked to confirm whether they wish to proceed. If they click to say that they do not wish to proceed, then this will be the end of the process, and we will not send any further communication to them. However, if they click to confirm that they do wish to proceed to the advice stage, then we will immediately be able to select a date for their telephone fact-find appointment. They will then be directed to our online financial review form for them to complete, if they've not already done so. We need them to complete this form with as much detail as they can before the day of their fact-find appointment. Prior to the fact-find appointment, one of our fact-finders will read through the financial review form before calling the client at the appointed time to discuss this. They will complete any gaps in the information and gain any further clarification that they require. In particular, they'll want to discuss your client's objectives with them. Following the fact-find call, this information will be passed to our advice team, who will be responsible for obtaining any outstanding scheme information we require, and they may also contact the client again if they need to clarify anything. We will then issue a personalised charges document to the client, which, if accepted, will lead to either an abridged advice recommendation or a full advice recommendation. Let's look at this process in more detail. Once your client receives our email with their personalised charges letter, they will need to sign and return this to give confirmation that they understand and accept these charges. This letter will state that if we give abridged advice, our fee for this will be $0. The letter will also detail our fee, should we proceed to full advice in both pounds and as a percentage of transfer value. Your ongoing fees, if a transfer were to proceed, are also set out in this letter. That's why it's important for you to let us have details at an early stage of your ongoing fees and any introducer fee that you wish to take. We can charge a contingent fee where this relates to advice about defined contribution plan pensions or where your client qualifies for a carve-out on the grounds of ill health and/or their financial circumstances. Please note that where non-contingent fees are charged, these are payable irrespective of our advice or whether your client follows our recommendation. Any advice fees that do become due will be invoiced for at a later date if your client chooses, or if they cannot be collected directly from transfer funds. We cannot proceed any further until we have your client's acceptance of the fees. Once we've gathered sufficient information about your client, their financial situation and objectives, plus details of the pensions that they're considering to transfer, we can then make an assessment of this. We can issue an abridged advice report if we are unable to conclude whether or not a transfer is in your client's interest, or if we are recommending against a transfer. As mentioned, we do not charge a fee for abridged advice. If we give abridged advice, your client is able to request full advice, but the full advice fee will then be payable irrespective of the outcome. If following the assessment of the information, we decide we can proceed with full advice, then we will make a full analysis of the information, which will include an appropriate transfer analysis and a transfer value comparator report where applicable. Once we've drafted the transfer report, this draft version will then be issued to your client for them to read, together with a link to our advisor's diary so they can book an appointment for an affirmation call. At the appointed time, our advisor will call your client and will summarise the reasons for the advice and check your client's understanding of these. Our advisor will confirm with the client that they understand the risks associated with the advice and address any queries that they may have. This is very important and should be taken seriously by your client, as our advisor needs to be satisfied that your client fully understands any recommendation to transfer and would be obliged to change their advice if it shows that the client does not understand what is being advised. If your client is happy with our draft report, then the full and final report will be issued. Otherwise, we can make any amendments which may result in a change to our advice. Finally, if our advice is to transfer and your client wishes to proceed with this, then they will need to return the relevant documentation completed and signed so that we can process the transfer. Alternatively, your client may choose not to proceed with our advice to transfer, or we may advise that they should remain within the scheme. However, irrespective of the outcome, where the non-contingent fee applies, this will become payable. So you may be wondering how and when fees for our full advice will have to be paid. The FCA still allows clients the option of having the advisor fee paid from their pension fund if a transfer proceeds. However, there are scenarios where this is not an option for the client. In summary, advisor fees cannot be paid from the pension funds when a client proceeds with a recommendation to transfer into a scheme which does not happen to facilitate advisor fees. For example, many workplace pensions will not facilitate advisor fees. Or where a transfer is recommended and the client does not proceed with this. Or where the client is advised to remain in the defined benefit scheme. In all of these scenarios, it will not be possible to collect fees from the transfer monies and your client will therefore be invoiced for the fees. As mentioned, following our initial fact-find call with your client, we will write out details of our fees for them to approve before we proceed further. If we only provide abridged advice, this fee will be zero. However, if we proceed with giving full advice, this fee will be charged irrespective of the outcome and will be calculated as a percentage of the total transfer value of the scheme or schemes that we've agreed to review. The fee charge will also include any introducer fee that you choose to take. I've set out a tiered fee structure in a table, where you can see that, assuming you take your full introducer fee, the total advice fee as a percentage of transfer value that we give full advice on will be 3% on the first £250,000, 2% on the next £750,000, and 1% on the amount in excess of £1 million. PensionHelp's fee split is always 60% of these maximum fees, subject to our minimum fee of £3,000. This means that whatever is left after PensionHelp's fee is taken is available to you as an introducer fee, or for you to give up in favour of your client if you wish to do so. If you choose to give up any of your introducer fee, this will be of direct benefit to your client, but it will not affect PensionHelp's share of the fee. Once the transfer monies have been received and invested, and PensionHelp have received the fees that are due to be paid from the transfer, then we'll let you know that you can switch your agency back via your own letter of authority so that you can continue to provide a service for your client. Thank you for your interest. If you have any questions, please don't hesitate to get in touch.